Hello everyone, welcome to another session of MarketinvestFX tutorial. Today we'll be talking about Forex trading. We've done an introduction into the foreign exchange markets. We've also done introduction into trading binary options and trading and using our signals to trade binary option. However, today we will be talking about trading the Forex market. So this is the outline of our tutorial. First of all, we'll be talking about the introduction to the Forex trading, and then definition of some Forex jargons like pips and spreads, lot size, leverage, margins. Then I will introduce you to the trading platform, and then I will show you how to trade the Forex using the MarketinvestFX signal. So let's get started. Introduction to Forex trading. Now, what is Forex trading? Forex trading has to do with you predicting that the value of an asset or a currency pair, stocks, commodities, indices, predicting that these stocks will either appreciate or depreciate, and you make your money based on those predictions. For example, let's look at this currency pair. We have a Euro USD. Now, Euro USD at this point appreciated in value, like it went up in value from here to this particular moment. So as a trader, imagine you come to a market and when you came to the market, you were at this position and you believed that based on your analysis, this market was going to appreciate, and you decide to buy Euro USD. By the time you get to this point, the product has increased in value. Sorry, the currency pair has increased the value and it has appreciated, and this is how you make your money. So you buy and then you make your money as the value of the asset or the pair begins to appreciate in value. The same goes for a pair or a currency pair that you believe will depreciate. For example, let's look at this particular position where we have Euro USD at 1.25104. At this particular position, if you believe that the pair is going to depreciate in value, then you sell, and as a result it goes down and you make your money. So Forex trading basically means you are predicting that an asset or a currency pair will appreciate or depreciate for a particular period of time, and as a result of that you buy and you sell and you make your money, and everything is done online. You don't have to be involved in traveling from one country to another to buy and then you sell. All you have to do is get a system, get a broker, get connected to the market, and you trade online. That's the way to go with Forex trading. So we move to the second, which is definition of Forex jargon. Forex spread. Now, when you're trading Forex, you have to understand that there's what we call a bid price and a ask price. Now, there is a value attached to a particular pair which is called the bidding price, and then there is a value attached to that same pair which is called the asking price. It's like you want to buy something and there is a bid tussle between the amount you want to buy it and the amount the person selling is willing to sell to you. That has nothing to do with the current market price. There is always a price for goods and services, but there is also a portion of that price that the seller is willing to collect. That is what is called the spread. So in a currency market, each currency pair has a bid price and an ask price. The bid price is the price that a trader can sell a currency for, and is always lower than the ask price, which is the price that traders can buy a currency at. For example, if the USD CAD bid price is 1.2860 and the ask price is 1.2864, that means that the trader can buy $1 at the offer price of 1.2864 Canadian dollars. A trader looking to sell can do so at a bid price of 1.2860 Canadian dollars per US dollar. So basically, the difference between the bid price and the ask price is what we call the spread. And so for every trade you make, when you decide to either buy or sell a currency pair, the spread is what we call the profit that the broker makes. So let's say you want to buy US dollars, Canadian dollars, and the price is 1.2860. You want to buy. Now the seller won't sell it to you at 1.2860. The seller is going to sell it to you at 1.2864. So this 0.004 behind it is what will be the commission that the seller is willing to take, apart from the profit or whatever happens. So irrespective of how this trade goes, if you're in the profit or if you're in the loss, the seller is first of all going to get this 0.04 as his own charges. So if you subtract the bid price from the ask price, that is what we call the spread, PIP. What is a PIP? Movement in exchange rate is what you call PIP to the nearest 4 decimal place. But just for the sake of definition, we can say that the value of a PIP can be calculated by dividing 1 over 10,000 or 0.001 by the exchange rate. The exception of this format is the JPY pair, which are coded with 2 decimal places. So for currency pairs such as Euro JPY and US JPY, the value of a PIP is 1 divided by 100. Divided by the exchange rate. So for example, if you are given a code, say Euro USD is 1.1835, 1 pip for the currency pair is worth 1 over 10,000 divided by 1.1835, which is equals to 0.000845. And if the Euro JPY is quoted as 1.32.64, 1 pip for this currency is 1 divided by 100 divided by 1.32.62, which is equals to 0.000754. Generally, PIP depends on the pair. So the thing is, if you have a pair that is quoted to, let's say, 6 decimal places, then you take your PIP movement to start from the 4th decimal place. If your pair is quoted with 2 decimal places, then you start counting your PIP from the 2nd decimal place, and that's how it works. You can play around with this, and there is a standard calculator for knowing the value of 1 pip, the money equivalent of 1 pip. I would make that available to you by the end of this tutorial. Leverage. The concept of leverage is used by traders generally, investors and companies to significantly increase the return that can be provided on investment, and it's always in ratios. So we have leverage in 1:1, 1:20, 1:50, 1:500, even 1:1000. At times maybe the other way around, 50:1, 100:1, 20:1, and whatsoever. But the main idea is that leverage, is like the amount the broker is willing to borrow you to make a particular trade or to profit from, particular opportunity, price movement between different countries or different currency pairs, as the case may be. So let's say we have a particular property, just illustrating the idea of leverage. Let's say we have a particular property worth $10,000. Normally you should pay $10,000 for that property, but in trading you don't need to have the $10,000 to pay. You may have a particular amount, and then the leverage will be the multiple of that amount to cover for the $10,000. So let's say we have $20 with us. A goods is worth $10,000. We have $20 with us. Now we want to buy that goods. The broker will tell you that what do you need to get to 10,000? You need a multiple of 500. So $20, which we have times 500, will give you what? Will give you $10,000. So in that case, the broker will say, okay, fine, I give you a leverage of what? 500 to 1. And when you have 500 to 1, it means that 500 multiplied by $20, which is the deposit, the initial deposit you have, will now cover for what? For the total amount of the goods, which is $10,000. So that $20 which are depositing is what we call the minimum margin requirements. That $20 is your margin. The $20 is a fraction of what you are willing to buy to cover for possible losses. And just like I said, since leverage gives the opportunity to increase your returns, so if the trading goes out, it means that you also have the possibility of significantly losing that amount in which you've deposited. That is the basic relationship between leverage and margin. Leverage is the amount the broker is willing to borrow, while margin is a fraction of what you are willing to buy to cover for possible losses.
Lot size, leverage, and margin. The lot size, the leverage, and the margin all work together when it comes down to the mathematical formulas. But first, let's take a look at each one separately and learn what they are. The lot size. The lot size is how you will determine what each pip you earn is worth. When you place a trade, you have to trade in little currency blocks or units. These little blocks are called lots. A lot is a certain size of currency traded, or a certain dollar amount. There are three basic lot sizes. There's the micro lot, and that's $1,000 worth of currency controlled. There's the mini lot, and that's $10,000 worth of the currency controlled. And there is the standard lot, and that is $100,000 worth of currency controlled. What lot sizes are worth in the Euro USD? One micro lot is worth 10 cents a pip, one mini lot is worth $1 a pip, and one standard lot is worth $10 a pip. Margin. Margin is a deposit required to open and to maintain open positions. This is not a fee or a transaction cost. It is simply a portion of your account equity set aside and allocated as a deposit to initiate the trade. Margin is multiplied by leverage to determine lot size. Now, margin is real money from your trading account. If you want to trade one micro lot, now that's worth $1,000, and your broker is offering you 50 to 1 leverage, in order to control that $1,000 micro lot, you'll need $20 of margin from your account. So that $20 of margin times that 50 to 1 leverage, so $20 times 50 gives you $1,000, and that's one micro lot. Your broker will take the margin and segregate it during the trade. You will get it back regardless if you win or lose your trade. Leverage. Because the market moves in such small amounts, 1/100th of a cent, we need to magnify the trade size in order to make any real money. Leverage is the trade size multiplier. That means your broker lends you the additional capital, although no money changes hands. Brokers can offer a wide range of leverage, anywhere from 10 to 1 to as much as 500 to 1. U.S. brokers are limited to offering you a maximum of 50 to 1 leverage. The formulas. Now, this is the basic formula, is margin times leverage equals lot size. Now, in the examples that we're going to use 50 to 1 leverage, a $20 margin, and a 1 micro lot, or $1,000. So in order to find the lot size, so the lot size is going to equal margin times the leverage. So the margin multiplied the leverage. So we know that the margin is $20 and the leverage is 50 to 1. 20 times 50 gives you $1,000, and that is the lot size. In this example, we're going to find the margin. So we're going to take that basic formula, that margin times leverage equals lot size, and we have to rearrange it in order to find the margin. Margin is going to equal lot size divided by leverage. So if we plug in the numbers, the margin is going to equal the lot size of $1,000 divided by the leverage is 50. So 1,000 divided by 50 is going to give us 20. The margin we need is 20. And then finally, in order to find leverage, again, we're going to use that margin times leverage equals lot size formula and change it around in order to segregate the leverage. Leverage is going to equal lot size divided by margin. So the leverage is going to equal the lot size, which is 1,000, divided by the margin, which is $20. So 1,000 divided by 20 gives us 50. So we know the leverage is 50 to 1. Your broker does all of this for you. You don't need to calculate the numbers before you place a trade, but it is good that you understand how the math works. Thank you for watching.
In our last video, we said that with $500, you can control a substantial amount of funds in the FX market. We're going to explain now how you can do that. Usually, if something costs 10,000 euro, you'll need to pay 10,000 euro for it. That's common sense. But in FX, you don't have to have the whole price of what you're buying. You only have to deposit enough money to cover possible losses. The deposit you put up is called margin. The broker then lets you trade a certain multiple of that margin. That frees up your money to put on more trades and allows you to make bigger returns relative to the amount invested. For example, let's say you want to buy $10,000 of Euro USD. You could, of course, deposit $10,000 and change it all into euros. But with margin trading, if you choose 1 to 10 leverage, you only have to put up 1/10 of the total amount as margin. That would be $1,000. 1 to 100 leverage means you only put up 1/100th, or $100 of margin. And with 1 to 500 leverage, the most available, only $20. So with $20 margin, you can trade as if you had actually invested $10,000. The advantage to this is that you get a much higher return on your capital. Let's say you buy one mini lot of Euro USD for $10,000, which is currently trading at 135. Let's say Euro USD goes to 136. For every dollar you've invested, you'll make 1 cent. So that's 10,000 cents or $100. If you put up the whole $10,000, then your $100 profit would be 1%. But if you only put $20 margin to begin with, then your profit would be 500%. That's much higher relative to the amount invested. That's why it's called leverage. A small movement in your position makes for a big movement in your profit or loss statement. Of course, leverage works both ways. In this example, if Euro USD declines to 134.80, your margin would all be used up and your position would automatically be closed. You'll lose all your money that you put up as margin. But the good thing is, you can't lose any more than your margin to begin with. Your losses are limited while your potential profits are unlimited. Furthermore, if you had $500 in your account to start with, after opening that position, you'd still have $480 left to enter new positions. You could put on trades in other currency pairs as well, increasing your chances of success. Without leverage, a trader would need to post the full value of each of his trades. Leverage allows a trader to take the same position with much less capital and to earn a higher percentage return on that capital. Of course, it works both ways. The more leverage, the less room for error there is.
Now, introduction to the Forex trading platform. For you to trade Forex, you need to get certain things set. The first thing is broker. You need to get a Forex broker. Now, we recommend about 4 different brokers. The first is FXTM. They call it Forex Time. FXTM is a world-renowned Forex broker. They have been here for a very long time. You can trust them, and they have a very good system. Withdrawals are processed immediately, and deposits are processed instantaneously. You need to get a broker. So like I said, FXTM is one. Another is Alpari, Alpari, LMFX, XM, and a host of others. The second thing is, when you get this broker, you sign up with them. When you sign up with them, you will be given a password. So when you log into your account, you would be redirected to download a trading platform. Now, most brokers actually, they make it possible for you to trade using a third-party application, which is called MetaTrader. Now, MetaTrader is an app, a software, both for mobile phone and for PC, that most traders are connected to. So you can have like 4 or 5 different broker accounts and connect to everything through this app called MetaTrader. Individual brokers also have their own web platform where you can trade, but they also give you the opportunity to use MetaTrader, which is a third-party application to trade. So you download MetaTrader, just one, and then you search for the name of your broker on the MetaTrader and you connect via the password given to you from the broker you use. Each broker has a password generated for MetaTrader. So if you're using FXTM, once you log into FXTM, once you register and log into FXTM, you get a MetaTrader password once you download the trader. Same thing for those using Alpari or Avatrade or LMFX or XM Trader. Every trader has a MetaTrader 4 password. So you just need to download the MetaTrader 4 or MetaTrader 5. Once you download it, you connect to your broker by searching for the name of the broker through their server. I'm going to show you how to do that. For this video, I'm going to make use of the LMFX platform. LMFX is a renowned forex trading platform, and I'm going to show you how to open your account and how to trade on your LMFX account. So you have here open demo account, open live account, but for the sake of the demonstration, we're going to open a demo account. We do not have money yet to put into it, so we're just going to try open a demo account. So you click here, demo accounts are wonderful to get you started, unlimited usage, testing, blah blah blah. You open your account. So first name, market, last name, MarketinvestFX. So registering for LMFX. So once you're registered, you will get a notification sent to your email address. So let me go check that out. So activate your LMFX profile. So you come to your email and you activate your account. So let's do that. Dear trader, you have just opened an LMFX Connect client profile account. Your login details to access your LMFX account has been sent to your email address. So we have to go back to our email address after the activation has been done to check for the details to officially log in to our client area. The client area is where you have a summary of everything that goes on in your account, your balance, your trading history, the password, the username for logging into LMFX, and for also logging into the MetaTrader 4, which I told you about earlier. Yeah, congratulations to LMFX. A password will be generated for you, but you can also change the password if you so wish. So to activate your account, you need a proof of identity like an international passport, your driver's license, your ID, and like. Then you need a bank statement or utility bill for the last 6 months. Then you go ahead to fund your account, and then you open it. But this is a demo, so we will just go over. We'll log in now to the client area on LMFX, and then we open our account. So you click login. So your username, your LMFX Connect ID will be sent to you, your password will be sent to you, and then you log in. Now look at here, new trader benefiting from the forex broker. Leverage up to, you see what I was talking about, 1 to 1,000 leverage. So if you deposit $200 here, you can trade as much volume as 200,000 worth of trades. You understand what I'm saying? So that is it. The leverage here is 1 to 1,000. They are willing to borrow you up to 1,000 times what you are going to deposit. Okay, so we're logging in, and open your account, download MT4, deposit, and start trading. So just like I said, you have to download a MetaTrader platform. The MetaTrader platform, like I said, is a platform that you like a third-party application where every broker is connected to, be it LMFX, be it MetaTrader, be it LMFX, be it FXTM, be it Alpari, just name it. We have all of them here. So we've been able to set up our demo account, and So you click download MT4. If you don't have it, you can go ahead and download it. I have it. So MT4 for PC. If you're using a Mac, you can just go ahead and download your MT4 for Mac. We also offered educational content where you can download to learn how to trade, and we also offer those services. We can teach you how to trade. Okay, so account management. Open trading account, try demo. What we did was to open our client's account just to have access to the client profile area. So right now we want to trade, and we need to trade the demo. So you come here, so you click open demo account, LMFX demo. That's the name of the account. So when you go to MetaTrader, you search for demo LMFX, and if it's live, you search for live LMFX. So amount, what amount do you want to start trading with? Let's say you want to start with a balance of $25,000. This is just a demo, so you click on. Congratulations, your demo account has been opened. So this is the MT4 login I'm talking about. So you get your user ID login, you get your trader's password, you get your investor's password, you get your phone's password. The leverage which you are given here is 500 because you opted for a 25,000 trading deposit. The demo is the server is demo. So after this, you download the MetaTrader platform, and once so here is the interface. I've been running a lot of demo on here, so I would have to create another. So you come over to file, open an account, and next, new demo account. Existing. Now the server here says GEFX demo 3, so we have to go back and look for LMFX. Now I have used LMFX before, so that's why you have it here, but you can also search for hits here. So you search for hits here, LMFX demo comes out, you next, and then you log on you put in your login details here, the one given to you by the broker when you created your demo account. So you bring the details and you log in. So I'm going to do that just now, and then you click on finish. Remember we started with 25,000, and once we log in, this is supposed to change. Yeah, so
incoming mail.
So you come here to check your trades. No trade has been made so far. Exposure, no current trade. This is your account history. Here you have a deposit of 25,000. No withdrawal has been made yet. So you get news and different kind of alerts here. So this is how to connect your broker account to MetaTrader 4. So for every account you create, there is always a sorry. So for every account you create, there's always a MetaTrader password and login details. Generally, your username and your password that will be sent to you. So how do you place a trade here? So you have here, we grab the market watcher. You have different currency pair. They call them symbol: USD, CHF, GBP, USD, and a lot of them are here. You can switch from one server to another. This is LMFX, FXTM, Alpari. So far you set it the way you want it to be. You can actually move from one broker to the other. All you have to do is just double click here, and then This is a chart of CHF JPY. If you want to move the chart to, let's say the CHF, you click on it and you drag it and you drop it here. Okay. You can change the chart pattern from candlestick to bars or to lines, but I'm always okay with candlesticks. So this is a 4-hour chart. You can change to 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 1 week, and monthly charts. Depends on what you're comfortable with. So let's take it back to the 1 minute. To add a new currency pair, you come here and click the currency pair available. We have major forex, we have minor forex, and if you search all through the major and the minor and you still don't see the currency pair, you come to view, and you click on symbol. So here you have all currency pairs, different commodities, gold, silver, oil, energy, different indices, and then you have other commodities as well, coffee, copper, palladium, and as much as you want. So this is where you get to see every currency pair, everything you can trade upon. They are called instruments or symbols. Everything is here. So whichever one you choose to trade, if you can't find it within the minor or the major, within the major or the minor, then you go to view and you click on symbols to add it automatically. So this is what you have when you log into your account. You will see a graph or like a chart containing the currency pair that is being observed. You can change your pair, your instrument, to, let's say you want to trade Euro CAD. You click on it and you drag it and drop it here. Now this is a 1 minute chart. You can change it to 5 minutes, 15 minutes, 30, 1 hour, 4 hours, daily charts, weekly charts, or monthly charts, whichever one you are comfortable with. You can also change your chart pattern from candlestick to bar charts. You can change it to line chart as well. You can zoom in, you can zoom out rather, and then zoom in as well. Now this is just a single chart. You can have more than one chart on this platform by clicking here. So this is 1 and 2. You can increase it if you want to. So let's just quickly run through the other aspect of this thing. So a signal comes in now and say, okay, I want you to trade AUD JPY. Like I said, you click on it and you drag it here, and then what am I trading? Am I buying? Am I selling? You can simply click sell or click buy. Here is your lot size. We call it volume. But what I want you to observe here is that you can't really get this thing without playing around the interface. You have to work your way through this MetaTrader software. It's quite elaborate, and there are many things here, but I will just take you through the basic things you need to know. So how do we place the trade? You can just go ahead and sell or buy, and then you set your lot size. But when we send you signals will be sent to you with a pair, with an action, with a stop loss, and a take profit. So to enter in a full detailed trade, once the signal comes in, if the signal says AUD JPY, buy at so amount, take profit at so amount, stop loss. So how do you do that? You come here and click new order, or you just simply double click on the pair. So you can see here the symbol, which is the pair. You can change your currency. You click on your volume, which is your lot size, the stop loss, and your take profit. Now the stop loss is meant to minimize your loss in case we tell you to buy, and instead of the thing going up, it goes the opposite way. The stop loss we give you will not make you lose your money too much, just a minute quantity will be lost. Now your take profit is meant to help you lock down every market's money making opportunity. So if we tell you to buy and the thing moves up and spikes up, so far it touches the take profit point, your close the trade and your profit will be retained. So that's why we set a take profit and a stop loss. The volume is meant to determine how much you make per pip movement. That is what it is. Now, if you set your volume to, let's say, 1.0, and for example, we're trading AUDJPY. Remember, we said every pip movement has an equivalent amount of money that it's worth. So let's say one pip movement now for AUDJPY is worth $1. If your volume is 1.0, then it means that for every one pip movement you multiply by 1.0. So if your pip movement is 3, and each pip movement is equal to $10, 3 pip movement is equals to what? $30. So you multiply your $30 by this one to give you $30. If your lot size is 0.1, and like I said, each pip movement, let's assume each pip movement for each GPY is $10. If you have 3 pip movements, that's what? $30. You multiply your $30 by 0.1, that's what? $3. So the volume or your lot size, as the case may be, is what determines how much you make or how much you lose per pip. So that's why, remember, like I said, if you have a deposit of, let's say, $100, it won't be smart to trade 1.0. It won't even be smart to trade 0.1. You should start with something like 0.01 so that your money will be well managed. Let's say you have a deposit of maybe 25,000. Now you can go with 2.0. At least you're still sure that if it goes south, you still have enough money to trade. Okay, so like I said, you determine the volume you want to use or the lot size you want to use per trade. Like I said, you can determine how much each pip movement is equivalent to. We have a pip calculator that for every currency pair, each pip movement has different values. For AUDJPY, the pip movement is different from Euro USD, it's different from USD CAD. So you have to be able to know what each pip movement is before you place your trade. You can just, there's a pip calculator for you to do all this. Is very, very easy. Your stop loss, like I said, is used to help you not lose much, to save your money, while your take profit point is there to help you lock in your profit as soon as the market reaches the take profit point. Now, type market execution or pending order. It depends on what you want to trade. Some people might say, you know what, I want to trade this particular point right away. So you click on your volume, your stop loss, your take profit, then you buy or you sell. Or you say you want pending order. I don't want it to trade now, I want to trade at this particular price. Maybe when it reaches, let's say, I want to buy or sell. So pending order is just meant to is meant for future trades. You may not be there, you can just say that when it reaches here, I believe that when the market reaches here, it will go back up, so you sell buy. Okay, so pending order is just meant to happen in the future, not instantaneously. While market execution means immediately as you are selling or buying, the trade will get executed. So having gone through the MetaTrader 4 or MetaTrader 5 software, we've been able to look through the various interface, how it works, and what to do. So we expect signals to come, and then we'll follow the signals as soon as they come in. So how do we trade the signals? We basically go back to our Telegram channel, and from there we receive the signals. Then we'll come back here to place the trade. So we're here, and we receive a signal. We're waiting for the signal, and then signal says GBP USD buy at 1.3950. That is, we are buying at this price. Now you need to understand that, like I said, the signal will come with a pair, an action, and stop loss and take profit. Sometimes we are buying at this price, but what happens if this thing goes the other way? the stop loss is set at 70 pips. So you take your first profit at 20 pips, you take your second profit at 50 pips, and you take your third profit at 100 pips. So to make it easy for you, we break down the actual price for each pip. So at 20 pips, which is your first take profit, the price is 1.39701. Okay. The second take profit point, which is 50 pips, is 1.4001, and the third is 1.40501. 20, 50, and 100 pips. Your stop loss is set at 1.380. So let's go to the app now and place the trade. GBP USD, we are buying at 1.39501. Okay, so GBP USD, let's see if we have it here. Oh, so GBP USD is not here. So what do? We had it, file, sorry, yeah, GBP USD, we have it here. So now we go to new order to place our trade. We are buying GBP USD at 1.39501. So well, we're told to buy. Now it's like 4 pips, like 3 pips away from, so we can still buy. My balance is $25. So let me just trade 1.0. My stop loss is set at 1.38001. My first take profit is set at 1.39701. It's not pending order. I have to take it right away because whoa, this thing is really moving so fast. Wow. Okay, so well, I would advise you take the trade instantaneously. The truth is, I took you a lot of time explaining to you. The market can be so fast, so you have to take the trade as soon as it comes in. Like I said, we would notify you before we send you any trade, just to get prepared for when the trade will eventually come. So now all you can see here is like what you have here is the TP, take profit 1. This is where we started, and this is your stop loss. So if this thing falls to this place, so that you don't lose your money too much, then it automatically closes here. Now this is your take profit point. So when it gets here, it automatically closes the trades, and your money will be saved for you. So basically, following the signals, we have our first take profit point with 1.39071. Our second is 1.4001. The third is 1.40501. Our stop loss, which has been set, is 1.38001. So it depends on how you want to approach the trade. Some people will decide to open the first trade at this point and set this as a take-up profit. Then when it reaches here, they open another point and set it to take profits when it reaches here. And when it reaches here again, they will now open another trade here and let it take here. While some people will just go ahead and open the first trade at this point, set the stop loss, and open the second trade and make the take profit be this second one. They still open another trade again, the third one, starting at this point, but setting this place as their third take profit. So they will open like 3 trades. The first trade will close here, the second trade will close here, and the third will close here. Each of these trades will have separate stop losses. So it depends on how you want to trade and how much money you have. But the truth is, if you look through our past results, you can see that we have a very consistent so if you look at our trade history, you see that we on the 12th of March we actually had 7 signals. We won 6 and we lost 1. So even if you set different take profit points, the truth is at the end of the day you still recover your losses because we win more pips than we lose. So that is how to trade profit. So like I said, so if the instruction says buy at, it means you have to go for the trade instantaneously. But if the instruction says pending order, then it means you have to go to your MetaTrader now and new order, you change it from market execution to pending order. We did market execution because the trade was ripe for the taking. We took it immediately. But if the instruction says pending order, you have to come here, set your pending order, and tell us the price. Tell the software the price that you want the trade to be done. And after it has activated, you now go ahead to set your stop loss, and you will take profit points. So that is how to trade. I will advise you to please take time and practice with the free signal sent to you. Practice with the free signal and use your demo balance to trade this thing. It is very, very easy. For those who might have been trading before, they will find this very, but for those who are just new to this, who are just getting started with this, I would advise that you take your time, go through this video and practice before you start trading real money. Okay, and I wish you the best. You can also trade using your mobile phone. It's the same thing. You go to your app, you download MetaTrader, and when you download MetaTrader, you search for the server, and then you input your trade into it. I will just give you a brief example here. So you go to your app store for iPhone users or Google Play Store for Android users, and you search for MetaTrader 4. You must have first of all opened your account with the broker. What I'm just going to show you is how to download the MetaTrader 4 and how to input your details, and then okay, so you search MetaTrader 4. Okay, I like MetaTrader 4. There is 5, but I just like the version 4. So after you search, you have MetaTrader 4, MetaTrader 5. I like MetaTrader 4, so I downloaded 4. You see, I don't have 5. That's why you have get here, and you open when you've downloaded it. So you can just go ahead. So I click open, and then this is what you have. So how do you add your LMFX server, and how do you input your details? So we have the advanced view. You have this tell you that like I said, there's a spread. The spread is what the broker earns for every trade you make, whether you lose or you win. The spread is the pip that is charged by the broker. So you have quotes, you have charts. You can check the chart. This is the USD CHF chart. You can change from hour to minutes. So this is 4 hours. You can change from 4 hours to 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, as you like. You can toggle by moving around, and you can just place your trade. If the trade you want to make is for USD CHF, you can place your trade. If it is not, then you have to go back. And now trade history. Well, this is one of the accounts that I opened there on my demo. Here you have 100,000, but I will still go back and link the LMFX account to it. History. This is the history for trade. Trade is what you see here will be your live trades. But at the moment there are no ongoing trades, so there is nothing here. The 100,000 you are seeing here is for one of the demo accounts I opened for a tutorial session as well. And then history. Yeah, these are the history of your trades, your past trades, and yeah, you'll come to your settings. Now your setting is where you had your new account. So how do? You come here, you click on setting, you say new account. Okay, and get to new account. Then it will ask you use login or password to connect to your broker of your choice. So you click here, and okay, so you can search for your trade for your broker here. Because I've used this before, so I already have LMFX. So I click on LMFX. I put in my login details. I put in my password, and then after that I sign in. I sign in here. So that's just how you set up your account on Meta. So once your account is set up, you want to place a trade. For example, the trade we placed the other time was GBP USD. We look for it here. If we can see it there, okay, yeah, this is it, GBP USD, right here. So you click on charts. You want to check the charts, fine, and then you want to trade it. You come here and click trade. Now this is, like I said, market execution. If you want the trade to be executed instantaneously or pending order. Now for pending order, you have if you want to buy, it's buy limit, and if you want to sell, it will sell limit. This is your own pending order for you. Okay, so let's go back to market execution where we are. Okay, yes, market execution, and then this is your lot size. Like I said, your lot size depends on how much you have or how much you want to make per pip. So you have to do this calculation to be sure. If you are starting with a $200 account or $250 account, I advise you go with 0.00s, like 0.001, 0.002, 0.003. You understand? So you set it here, and 0.01, and then, like I said, you add your stop loss, you take profits. You understand? And then when you set this to, based on the trade we placed at that time, we set our stop loss to be 1.3801, and our take profit, well, let's use our second take profit because I guess the trade has been on since we traded it the first time. So let's use the second take profit, which is 1.40001, and then what we'll buy. Okay, so trade done, successful. So when you come back to trade here, okay, 0.001, so it started here, and okay, right, so that's it. So play around with it, and then get used to the interface before you start trading real money. Like I said, these are your quotes, this is your chart, then the trade, the ongoing trade, the ongoing trade, and the history, and then you can change your settings here, and that will be all. Thank you very much, and please make sure you practice before you start trading real money. Thank you very much. Happy trading.